Well, hello, Maverick traders. Let's continue with our candlestick patterns. Today's pattern is going to be the Bearish Harami. Joe with you here from Maverick. The first thing we like to do with all of our candlestick patterns is just nerd out on the statistics. So we're going to jump over to the Bukowski website and break this thing down. Let's go ahead and start. Theoretical performance is a bearish reversal signal. Makes total sense since this is a Bearish Harami pattern. Now, the tested performance is bullish continuation 53% of the time. A lot of these candlestick patterns are barely above 50-50. A lot of it has to do with where they develop. Now, what I do love about Bukowski, and I'm going to say it every time I remember it, is he just takes a look at the pattern and follows it moving forward. He doesn't care if it's an uptrend, downtrend. He doesn't care what the markets are doing. He doesn't care where it's at. He's just identifying the pattern and running it through a series of over 100 trades and coming up with these statistics. So they're pure. We can actually take these and make them our own. Frequency rank is going to be 26 out of 103. These happen often. Now let's call it what it is, folks. When we see a pattern more often, it's less often that it actually continues or confirms the direction that we want it to do. So the overall pattern is for a bearish reversal. We see that we have a little bit of a difficult problem when it comes to the continuation because that happens more than often. But there is a 46% chance that it can roll over. How do we put those statistics in our favor? It depends on where it's placed. Let's continue with what Bukowski has. Overall performance rank is 72 out of 103, probably because it happens so often, and 53% of the time it actually moves higher. It doesn't reverse. Best percentage, meaning its target price, however, is 64%. Bull market down breakout. So when these are used for an extended move to the upside and an uptrend, and then it pulls back, it actually hits its target 64% of the time. I'll tell you once again, folks, his target is basically the measured size of the pattern, no matter what pattern that is, added or subtracted to the up or downside, the high or the low. So that's where he comes up with the target price. Our target could be completely different based on the style of trader you are. But as far as keeping apples to apples, that's what he's basing it on. So 64% of the time, not asking for a ton of move, but it does hit it. Now the best average move over 10 days is -4%. So this will, once it does reverse, extend 10 days afterwards on average, its best average move in a bear market down breakout, which is what I like to use them for. Rolling over, confirming at a pivot point, and then extending to the downside actually has a higher probability based on the chart, not just the pattern itself. Keep that in mind. Because of that, the 10-day performance rank is 50 out of 103. Take a look at the difference there. The overall performance is 72. But the 10-day performance of a downtrend down break, it goes to 50. So it is a much better chart, or I should say it's a much better signal in the correct environment, in this case being bearish. So let's talk about what the pattern looks like. We're looking for a few bullish candles to the upside. The Bearish Harami is a candlestick within the body of the previous. So we got a big green candle here, and inside the big green candle is the body of the bear candle. Now, it doesn't have to be the highs and the lows, and I built this example on purpose. You can see the high is well above the close of the bull day. It doesn't matter. It needs to be body inside of body. Now, the confirmation is big, especially this is a little bit more Maverick-esque to it. The confirmation is a candlestick below the low of the inside day. So I need to see this close here below the low of the inside day, regardless of where that low falls in the formation of the Bearish Harami itself. I just want to see the confirmation of the downside. It's just one extra step to maybe increase those probabilities moving forward. So it's pretty straight. It's pretty straight up. Now, the best setup conditions in this case, based on Bukowski and how I like to use it, is that bearish trend, bearish breakdown after a bullish extension. So downtrending chart is going to give us the probability of that 4% move to the downside over those 10 days. After a bullish extension, it'd be cool to see that come up to a moving average or a Bollinger Band or whatever you guys like to use, an Elliott wave, things like that. Set a pivot point. It'd be just ideal. It just adds to our probabilities. Confirming below the inside day's low. It's different. Remember, the confirmation of the Harami itself is to have the body inside the body. High and lows doesn't matter. Confirmation of that Harami has to be below the inside day's low. Now, if you folks have been following along with the series, it's the exact same thing with the bullish Harami, isn't it? This time it's just to the downside, not the upside. It needs to extend above and below highs and lows. Higher level of frequency with lower performance. That's because it happens so often it gives mixed signals. So we could actually throw out some of the things we see in let's say trends or charts that aren't conducive to what we're trying to do. Something that's consolidating, something moving higher, some sort of back and forth jumping or gapping or running around. We can just kind of throw those out. If we're looking to put our best foot forward, we could look for something downtrending. Now, guys, I'm going to run out here and see if we can't find an example. And I just jumped out and found this. I didn't really put too much into it. I do believe there's one coming up. But why I didn't is because these are supposed to be frequent. And I'd like to do this as a class. So let's just kind of move forward here. Now, this was kind of in a little bit of an uptrend. It looks like it's correcting. I do believe that I had it pulling back or breaking down. There we go. So we have a gap lower. And this is one of my favorite patterns, by the way, a closed gap. If you don't know what I'm talking about, jump on one of our courses. We've got classes on it. So we're moving higher, and we're actually now moving back up to where the gap started 4 days ago. There we go. Now, this is a super tight bearish Harami pattern, isn't it? It almost looks like that's a doji. That's right. For you guys who've been following along, you know what a doji is by now. Well, there it is. This doji is inside of a bull candle coming from an up move. This is almost ideal for me. So the confirmation needs to be a trade below the low of this candle in front of us, the most recent candle. Whoops. Well, okay. Well, we got it. We got it. We got it aggressively. We got it fast. Candles like that kind of bother me, folks, personally, because it looks like I missed the majority of the move. Let's count 10 days and see where this thing ends up using Bulkowski and a little bit of Maverick to see where we're at. Now, this should be 4% lower. It has a 64% chance of making its range, which it far exceeded, didn't it? But for us, waiting for the confirmation, let's see where it goes in 10 days. So that's 2, 3, 4, 5, 6, 7, 8, 9, 10. Not too bad. So overall, after the 10 days, we are definitely over that 4% expected move to the downside, probably a little bit more. But for you guys that are targeting any sort of different type of options trade, you might have been dealing with this a lot sooner than 10 days. So let's see if we can't find another example moving forward. Okay, here we have another one, and it's after a pretty big extension to the upside, but it has hit some pretty good resistance. Confirmation will be below this day's low, and this is a pretty tight doji. This looks extended to me. So this might have a good probability of confirming. We'll see if it does. Nope, it did not confirm. Confirmation is going to be trading below this doji's low, and it didn't quite get there. So let's go 10 days. That's 2, 3, 4, 5, 6, 7, 8, 9, 10. Now that's the extension that Bulkowski found. 54% of the time these will extend. Okay, so now we have another inside day. This isn't quite the extended move to the upside as I'd like, but that is technically a bearish Harami pattern. Now what's interesting about this also correlates with the resistance level that it set 7 previous days ago. So we can correlate that and see if we can't add that to the numbers. Now confirmation is what, folks? A trade below that inside day's low. Did not get it. So now we're still consolidating, aren't we? So here's another move. Didn't really confirm. Actually, it did. It did confirm slightly below the Harami's low. If you guys are still looking at this, it has now confirmed. If not, this is something that I wouldn't blame most of you throwing completely out. So let's see what happens now that the confirmation's there over the next 10 days. So all over the place. It did slip. It slipped aggressively. And it's kind of tough, folks, because we're just trading this off a candlestick. Who knows what happened over those last few days. But net, we're about exactly where we started. So this really didn't give us any sort of advantage in either direction. Now moving forward, I finally found a kind of a little bit better of an example when it comes to coming from a downtrend, and we had what 3-4 days up and an inside day. So this is a doji. If you guys know what a doji is, it's a reversal signal, but it's also within the range of a bull candle. So this is a nice bearish harami in a little bit more, I would say, a better pattern when it comes to a bearish bias. I have no idea what it's going to do, so let's find out what it does. Does it confirm? It sure did. So it confirmed the next day with a move that closed below that inside day or that doji day low. So let's see what happens over the next 10 days. Hey, we got one to work, didn't we? Now, I don't know if that was luck of the draw, but you can see over the next 10 days after the formation of it, it took a while, didn't it? It didn't really roll right over, as some traders would expect. But over that 10 days, now I can see why Bolkowski was pulling that 4% pretty consistently. All right, that's about all we got. Let's do a quick summary, and I'll cut you guys loose. So overall, the pattern frequency is high, 26 out of 103. So this happens very often. Things that happen often aren't always the best. That's why the performance level is 72. Now remember, folks, it actually went from 72 to 50 overall because of the ability for this to reach that 4% drop or its target, which was in the mid 60s. So if you can get this in the correct order, like we were saying, downtrending after a bull extension, or we refer to it as a bear rally, then you could actually run back into some of those numbers. Pattern rank mid-level at 45 out of 103. That's pretty decent, and I do believe if you use it for the downtrend, the bearish patterns, a little bit of corrective action, that's probably where you get that number. Now remember, 53% of the time it is a bullish continuation, so there are a lot of false moves. That's why I truly believe if we wait for confirmation, folks, we could probably narrow that 53% down, or I shouldn't say narrow that down, but we could avoid some of the situations to where it just consolidates and moves higher. So it can be used in both bearish or bullish trends, but if you do want the advantage of the pattern itself, best to lean towards the bear side. All right, guys, that's all I got for today. Thanks for joining me, and we'll talk to you next time. Bye, folks.